Welcome to the Trading Pit. I'm Jared Blikre, host of the Stocks in Translation podcast, and I'm joined by Kenny Polcari, former New York Stock Exchange floor trader and host of Yahoo Finance's Trader Talk podcast. Today, we're helping you get your portfolio in shape for year end. And Kenny, we got a few more catalysts on the calendar. The big one is the Fed meeting next week, but then the lights kind of dim until January.
Yes, they do. And look, I think it's, as the market expects, we're going to get this 25 basis point rate cut. But that's not really what people should be listening to, because I think the market's already discounting that. They really want to hear what Jay Powell has to say about the coming 4 to 6 months. Where does he think the economy is? Where does he think the labor market is? What does he think the pace of further cuts are going to be? And are there even going to be further cuts, or are they going to go into this holding pattern? And look, you shouldn't discount the fact that there are members of the FOMC that have been pushing back on the idea of further rate cuts. Sure. So there's going to be very interesting conversation.
Kenny, I could talk rate cuts with you all day, but we got to get to what investors want to know about their portfolios. And I've got a nice little list here. Let's just briefly review tax loss harvesting. You can, if you have a security or a stock that you own right now, you can actually sell it, and then you can take that loss and possibly offset your tax bill for next year. But you got to be careful not to buy it back for 30 days. Any thoughts on that?
Right. So, well, it's something that as a wealth manager, an asset manager, that's what you do, right? You should take advantage of it. So individual investors should take a look at their portfolio and take advantage of any loss. And if you want to take a gain, you're going to take this loss, write it off against the gain, and then reallocate some of that money into either a new sector, or like Jared said, you're going to wait 31 days and then reinvest it if you like the name that you sold.
All right, now let's talk about rebalancing and reassessing portfolio risk, because that's what investors should be focused on right now.
Right, so you really have to take a look at the portfolio at the end. You have to see whether you're out of balance, right, in terms of have stocks gone up in value that they've now created a portfolio that's not in balance, or at least not in balance the way that you want it to be. So you should always look to fix that. Now, it doesn't mean you have to sell something. The way I do it is I add new money to the sectors that are now underweight, and then I bring the whole thing back into balance again. So you could do it a couple of ways. That's just the way I do it.
All right, now let's talk about risk tolerance and time horizon, very key concepts that we talk about in trading and investing here. I know you spend a lot of time on this, so break it down for us.
So you really want to talk about time horizon, who you are and who the money is for. You might be in your 60s or 70s, yet the money we're talking about is for children or grandchildren that might be out 15, 20, or 25 years. And so it should take on a different risk profile than if it were for you at that stage in your life. That being said, you should also be aware of the score, the risk score of not only the portfolio, but the individual names within the portfolio. Because every stock, every ETF has its own risk score from 1 to 99. Anything above 71 is further out of is beyond the S&P in terms of risk, right? It gets riskier than the S&P 500. Anything less than 71 becomes more conservative. So you just need to understand how the different names in the portfolio interact to give you an overall score.
And also something key here, some older investors might need cash flow, and so that comes into dividend needs, cash needs, and that's something to start thinking about for the first quarter.
Yeah, of course, it should be something that you're always thinking about, again, depending on who you are and where you are in the life cycle, right? Right now, you might be 60 but fully employed, and you're not looking for dividend income. You're not looking for the portfolio to generate income you're going to take, so you want to have it reinvested. If you have a portfolio that's generating a lot of income, you just want to reinvest it. If it's income you need or want, then you should figure out, what it's going to spin off. You can expect to spend 4% of your portfolio and never run out of money. So $1 million portfolio you'd take out $40,000 a year. So you'd want to get dividends that would pay about $40,000 a year, and then that could go on forever, and you'd never run out of money.
Sounds like a good prospect to me. Kenny, I love breaking down tickers with you, and we can do so in line with some of the biggest themes this year. And we've done this in some other segments here. So I want to hit some tickers that we haven't. And this is Apple. This is year to date. And what I want to point out here is Apple was really late to the party off of those April 8th lows. Finally got started around July, August, and it's been off to the races now, hitting record highs.
Right. It's taken off, right? It broke out. Not only did it break out of the April lows, but then it broke out of back in March, right? We busted up and through that. And now it's part of that AI story, right? We're hearing Apple come out. Not only is the end of the year, they've got new products, and Christmas season's coming, holiday season's coming, and all that stuff. But in addition, there's a whole AI theme going on with Apple. So look at it now. It looks like it's completely broken out and will continue in this uptrend.
Now let's take a look at another hyperscaler, Amazon, and this chart is really interesting to me. 240, a big level here. Looks like we had a little poke above it. Might have been a false breakout. Nevertheless, we got an interesting trading range we're working with here that I'm seeing.
Right, so I think it was a false breakout because look, we traded up, we came right back down. It didn't even stop, right? It didn't even stop to test it to see if support was there. It broke right back through. So I think we are stuck in this trading range that you see, and you could probably expect it's going to try to hit resistance one or two more times before ultimately breaking out if it's going to break out. I think it is in the new year, but I think it's going to take us some time to do it.
And so you'd wait until the breakout?
I would wait until the breakout.
Shares.
Now, if you already own it, like I already own it, so I'm just not going to do anything with it, right? I'm going to sit and watch it. But if I see it start to break out, then it may change my mind, cause me to jump in and buy some more.
All right, we're going to stick with the hyperscalers, Microsoft, and this is another one. It was off to the races in April, but it has fallen off its peak now with NVIDIA.
Right, so I think this is just a little bit of gotten dragged into the story that maybe it's a little bit stretched in terms of its valuation. Certainly the fundamental story from Microsoft has not changed, but I do think this whole recent story about the whole AI trade either being in a bubble or being stretched is just taking its toll on names like Microsoft and NVIDIA. I don't think it's a reason to panic. Certainly we're not anywhere near the lows. It's kind of going to consolidate, and here is what it appears to me. But I think you just have to keep your eyes on it. Again, it's a name that I own, so I'm just going to sit and watch and see how it performs.
All right, NVIDIA, we're gonna tackle the OG here. Similar story, similar chart, kind of.
Right, exactly, right. So we saw it's taken off. It kind of, it got itself challenged up there in November. It's backed off. It's kind of holding right in here. You want to watch it. See that line that you just drew?
Yes.
That you want to watch that and see if it holds that level. If it does and starts to trade up again, I think it's going to remain in that channel. And so you just kind of have to watch it. For me, this would be a hold. Again, we own it. I own it. So I'm just going to continue to watch. If it breaks down below here, then I think you have to watch, because then I think there's a potential that it even breaks a September low. That would be something you'd want to keep your eyes on.
All right, let's fast forward to a different sector. This is going to be the banking sector, finance. Here's Bank of America hitting record highs recently to little fanfare.
Right, well, hitting record highs along, if you look at a couple of the other names, you look at the XLF, the financial ETF, it is also breaking out. Bank of America is another one of those names that I own. I like it. I love the fact that, it's broken out here. Not with a lot of fanfare, but I like the way it is acting. And it clearly feels to me like it's in this uptrend. It is certainly within the rails that he just drew.
Yeah, and very similar name here, JP Morgan.
Same thing.
Now, yeah, it's kind of broken the uptrend, but it doesn't look like anything critical. It's just kind of consolidating here near the highs.
Right, so what it did was it broke that uptrend, but you see it came right down to that level again that you drew, and now it's bounced off of that. So I think it's going to remain in this trading range, and you're going to want to see whether it breaks up or breaks down based on its next move, right? Whether it's able to pierce up and through the November high there, or whether it's going to back off and come to the November low.
All right, here's another ticker I got from you. I want you to tell me your reasoning on Verizon. Is it for the dividend? What do you like about Verizon?
For me, it's just all about stability and dividend in Verizon. It trades at a very tight range. It pays about a 6.75% dividend. It's kind of it's a big mega cap name. It's very stable. It doesn't, it's not up 150% or down 20% in any one year. It kind of stays stable. But for me, it's all about the stability and the dividend, which I just take and reinvest.
Yeah, very good. We have a little bit of time for the quantum trade here. So IonQ, and this is a multi-year chart here. This goes back, I believe, to their IPO. Let me just dial up the year to date. And there we go. Bounce kind of came back to break even. And it's very volatile, but
it's a very volatile name. It's in the quantum space. And so quantum, I think, is going to be a big theme going into 2026. It's already a theme now in late 25, but I think as we continue to get down that AI narrative and that AI trade, you're going to see specific quantum names. And IonQ is a name to watch, right? Again, you see how volatile it is. At one point, even just a month ago, it was up about, what was it up? I think it was up about 40%. It's now almost flat on the year, but you see it came right back down and bounced, which is a positive sign, right? It could have easily broken and traded back to the March lows. It did not. So I want to keep my eyes on that. Again, it's a name that I own, but if it breaks below this line, then I'm going to look to add.
Another quantum trade, surprising, we only got 30 seconds. IBM.
I love IBM.
Big Blue. Let's do it.
Right. I love IBM. It is a large mega cap name, takes you all the way back to the 1960s. Look, it's
there you go, the 1960s right here.
Yeah, it's had its great move. And what a lot of people don't recognize, besides being also a good dividend payer, it's got a lot going on in the quantum space. So if you want quantum exposure with a more stable name, IBM's the way to play it.